The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as the old Options Insider Radio Network. And I am joined today on the old all-star panel by two returning regulars, starting off in order of distance. With the man from Maine, a.k.a. the Rock Lobster himself, good old Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the show, sir.
Thank you very much. I'm hoping the oil can I put on my chair is going to work. I actually use lobster oil.
That's an expensive thing, sir. You must really be dedicated.
Not in Maine. It's actually very cheap. I think the governor is going to make most of the people run their cars on it.
That's like, you're like Kuwait up there with your lobster oil.
Oh, it's crazy how much lobster oil is spilling out of the sea up here. It's insane. Insane levels.
But so far so good. I don't hear the squeak. See, that lobster oil must be good stuff. You have to send me a case one of these days. And also,
once you transfer it out the state, though, I got to put a $1,000 surcharge on it.
Well, there you go. That's just like Kuwait again. You know, once you start shipping,
exactly, that's where they make their money.
Once you start shipping that product, all bets are off.
Yes, everything becomes problematic then.
All right, and also joining us on the old panel today, good old Mr. John Grigas, holding down the Options Express hot seat. Mr. Grigas, welcome back to the show. To you as well, sir.
Yeah, good to be back. Good to be back on Monday. I think last time I showed up, it was a Thursday show, so I got to talk to Tusaw. So I went through a little withdrawal from the Lobster Man himself. So good to hear Andrew's voice again.
Yeah, Tusaw Andrew. That's a Sophie's choice, sir.
I know, right? There's no winner.
There is nothing. There are nothing but losers in that choice. All right, and with the team assembled, we're going to dive right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the show where we dive into, surprise, surprise, what is trading? And I should let our listeners know we're recording a little bit earlier than usual today. Usually we record after the close on Monday. Today we had to move things up a little bit, so we're recording around midday here, Central Time, and it's looking like a broad sell-off across most of the major indices. It seems like it started to ease up a little bit, but now it seems to be coming back in full force again today. Most of the major indices down at about anywhere from 1.2 to nearly 2% today. The S&P's off, as we're recording, down 1.6% to 1313. The Dow down about 1.2% to 12,490. The Nasdaq leading the charge, down nearly 2% to 2837 and a quarter. And the good old VIX cash popping to the upside, coming off that weekend and also getting a nice sell-off. It's usually a nice 1-2 double whammy for a nice VIX pop, and of course we're seeing that today with the VIX cash up about nearly 15% to 20.78 on the day. So why don't we start there, Andrew? Any interesting VIX action? Of course, this is not exactly a surprise given the, of course, like I said, the weekend and the broad sell-off. This is a recipe for upside in VIX.
It is a recipe in upside in VIX. We are orderly though. What we like to measure in option pits, the orderly decline of the VIX as opposed to the smashing destruction or the smashing explosion of volatility. So with the weekend, and we're down around 1.5%. So that's right there. That's about 10 or 15%. The VIX cash should be up just on movement alone. Don't forget. So, and actually the VIX right now is underperforming the weekend and just the movement. So, because don't forget, VIX is price weighted and Vega weighted, or they has those components. We expect a certain amount of movement when the market now tanks. So we're getting the tank, but we're not getting the explosion. And how you can see if you go to the CBOE, we'll plug the CBOE, their volatility, the CFE futures website. While the VIX cash is up a lot, the futures kind of were about $4 over cash last week. They dropped to 2 or below 2 this week. So they've gotten crunched pretty good. So a lot of the volatility actually was in the futures already and has come out. So, we have some positions on that we've been waiting for that to happen. Any move now down in the VIX is going to be followed by the futures a little tighter, and the two are going to start, closing on each other. So we're not getting the big move. Also in the SPX, you see the skew getting flatter for the week, flatter from last week. So I have to say they're not really coming for it. It's like, okay, they're accepting this 1300 to 1360 range, and that's it. And the volatility just it's becoming, I think, a nice day trading product, to be honest. The volatility products are kind of back in that
nice range.
Well, it's, I'm not so worried about it going to 40 VIX anymore, and I'm not thinking it's going to 15 VIX anytime soon. So, but, maybe range of VIX is like 16.5 to, 22, 21 maybe cash. And the only thing that makes it spike at all is if the euro is not going to be the euro anymore. And
yeah, that's true.
But we're going through like the nasty part of the discussions now, because now the Greeks and the Italians and now this French socialist guy, they're banging on the Germans to give them more money, and the Germans are saying no. It's like they're going through the same song and dance again. So the rhetoric is going to get nastier, which means, what did George Soros came out and said the euro might break up. Well, it's like Moody's with the bank downgrades last week.
Are
they serious?
Exactly.
They downgrade when the balance sheets have already been marked to zero on all these loans. I mean, are you?
Yeah, so much for the rating service being any sort of canary in the coal mine. Yeah.
Are they in front of the curve?
The canary's dead. I guess we should change our ratings.
Are they behind the curve? Where were they in 2007 when they were loaning money with no collateral?
And yeah, Soros, the same thing. He bet against the British pound once, made a lot of money. Now he's some sort of great currency guru, apparently. But yeah, he's too little, too late on this one either.
And his funds need to buy back some stuff.
Yeah, you think?
It's like Goldman last week. I'm sorry,
you
but
think?
Yeah, guys, we know all this stuff's bad. You say it now.
Yeah, there's no good actors to be found in any of this stuff. Of course, you mentioned all the sell-off today, and that's coming out on the Euro concerns. There is a big EU summit scheduled for later this week. A lot of people are looking forward to that, to see if perhaps that will solve some of the issues. Of course, you mentioned Germany, the kind of schism going on in Germany right now, whether the Euro is even worth the effort, I think, for a lot of people out there thinking about this. I mean, Germany could obviously go its way on its own And of course, this is a debate that's been happening since the birth of the euro. Germany was probably the one country that really needed it the least, and so this has kind of been a debate many years in the making. We'll see if this.
Now they do need it though, right? They need it for the cheap export currency.
Yeah, I'm not saying there is no value to the euro for them, but I think of all the economies in Europe were the euro to go away, I think Germany would still be on his head standing at the end of the day.
Right.
Would not be on his head, I probably should say. Of course, we have Cyprus officially requesting a EU bailout today, which I don't think that surprises anybody. Cyprus has been a disaster for a long time. And of course, Spain looking for EU aid for their banks. So a lot of fun stuff coming on in the Eurozone, weighing on the old markets today. Andrew, I liked what you mentioned about the futures, because looking at the data from last week, it certainly was a heck of a week last week from a VIX futures perspective. They put up 657,000 contracts last week. That beat their previous high. It was the most active week ever for VIX futures, beat their previous high of 533,000 contracts, which was back in the August 8th period, around the leading into that whole downgrade kerfuffle, I believe, around that time. Was that the downgrade, August 8th? Wasn't that week of that, or was that the debt ceiling debate time? I'm losing. It's all rolling together.
Well, first off, they did the debt ceiling, then the downgrade, and then they piled the euro crap on top of it.
So I'm trying to think that August 8th week, I believe, coincided with either the downgrade or the. I'll have to look at my charts to see which one it was.
How's that downgrade been looking? I mean, and I can't disagree with them on. I wish they would have done it when they took on the debt the first time. That first $1 trillion deficit instead of the fourth year.
Yeah, well, you're trying to use ratings agencies like they're intended to be, as opposed to what they unfortunately actually are. And,
I know. I'm sorry. I'm just being a little. I'm being the trader in me likes buying stuff when it's cheap and selling it when it's expensive. But just, I guess it'll get shaken out of me eventually. I just hopefully not yet.
In case the listeners haven't figured it out, we tend to lean towards the cynical here on the old option block. Today is a good example of that. Of course, there was
no one.
Yes, exactly. There was a sparkle, a bright light, a pinpoint, if you will, of good news today, with a new home sales hitting a 2-year high back in May. About 370,000 new homes versus 346,000 expected. So that was looked like a brief reprieve from the sell-off towards the early to mid-session today. Looks like that since has been gobbled up by the concerns yet again. Of course, oil continuing its downside. That is perhaps, if there is one steady bit of good news for the market, it is that. John, you've been watching what's been going on out in crude again today?
Yeah, I mean, we always have our eyes on crude. I mean, we thought it was going to pause around 90, and it moved, I believe, quicker from 90 to 80 than it did from 106 to 90. I mean, what a move. I mean, it looks like inventories continue to rise or hold steady. But it's almost like they have an indicator that, the economy or the world economy is slowing down, because you're right. I mean, they have never really, tested any upside resistance on the way down, to confirm it. It just pauses for a week and then heads lower. Now we're starting to see it in the pumps, so hopefully it'll reduce some of those inventories as people start to take some summer road trips.
Yeah, I'm trying to remember the last time we saw such a pronounced sell-off right into the teeth of summer driving season. It's not a typical occurrence. Usually that's just an additional narrative to keep the old price spiraling upward. But this year, yeah, you're right. Oil doesn't seem to be able to catch a bid. So interesting times. And of course, that I think that will help to ameliorate some of the other effects we've been seeing of these just repeated disasters coming out of the EU and the market sell-offs. Oil keeps dropping. That's going to be the one bright light we have to look to going forward. Anything else catching your eye over there? What's lighting up the tape right now at OX? Or is everyone kind of keeping their powder dry? Of course, I should mention we also have the Supreme Court stuff hanging over our heads this week. So a lot of interesting things in the hopper for this week.
Yeah, we still have some people talking about ARNA from last week. I mean, that was one of the more volatile stocks. We got a lot of people that have been playing it. It's a biotech and its sister one there, VVUS, which we were desperately trying to find news today. And I think you put out a unusual activity on VVUS on Friday on your website, Mark. It was just
yes.
It was funny kind of trying to do VVUS important news and seeing the Options Insider pop up there right at the top. But if you look at
hey, we tend to be important every now and then. Once in a while.
Every blind squirrel eventually finds a nut. The the VVUS options are just extremely bid on the put side. And I'd have to check with our short desk, but they may be hard to locate or hard to borrow stocks. I was desperately searching, trying to find if there was an FDA announcement coming up. Look at that. The 26 call put there, $4. I mean, it's just unreal. Even the $10 out of the money put there is going for like $1.10. And I think they're looking at what happened with ANRA and just kind of pushing the price of all these options up there. But so ANRA and VVUS are getting a lot of calls this week.
Yeah, those
people love to day trade this stuff.
Those July 26 puts are about $4, $3.95 at 4.35 right now. Not exactly lighting up the tape today. Only about 90 contracts traded so far, but yeah, a lot of juice in them thar hills out there in VVUS. This one you guys are watching as well, Andrew. It seems like a good candidate for some option pit mentoring.
We had some guys putting on the time spreads in here. We just were like, because the vol skew has been nuts, looking at, I think I have to check and see if they actually put them on. We were evaluating them. We're kind of like, well, it sort of smells like sort of FDA-ish. Or like, I believe the Euro was waiting to approve something, their big drug. So that's not 100%. But yes, I mean, we have looked at it, and just looking at the pricing, actually it was now the back month that the August has come up. So as far as time spread wise goes, they're actually doing a little bit better. They got real cheap, and now they've actually expanded a little bit. So I think that position's worked out a little bit.
Yeah, we're not in the old odd block, and then we're going to jump into that in a minute, but just looking at good old VVUS right now, and it's a light day, actually. Of course, we're still only partway through the session today, but they've been averaging about 18, nearly 19,000 contracts a day of late, and only putting up about 3,000 so far today. So good old VVUS perhaps settling into a wait-and-see mode going into some of these future deliberations here. But interesting stuff to watch on this one as well. And I think with that note, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we discuss the interesting and or the unusual options activity that's lighting up the old tape today. And we're going to kick things off with Men's Warehouse, ticker symbol MW. I'll have to go back and look into our records. I don't believe Men's Warehouse has been in an Odd Block featured guest in the past, but it's a fun one to watch today. And I think this one actually, and the other name we're going to discuss in the Odd Block, there's a theme in today's Odd Block. I don't know if either you wants to hazard a guess as to the theme for our Odd Block special today, but there is a theme with both of our names today, and perhaps I'll just save you the shame of having to guess and let you know what it is, and that is, of course, it's risk reversal day apparently in the Odd Block, and it's upside, it's bullish risk reversals today. We're going to kick it off with Men's Warehouse. Like I said, we saw a size bullish risk reversal going up in good old MW today. This is a name that averages about south of 400 contracts a day. They've done 13,007 contracts so far today, and all of those contracts except for 7 was in this one risk reversal trade. So there's 7 other contracts that have been traded in Men's Warehouse today, aside from this risk reversal. And what we saw was someone coming in and hitting, just blasting out a bunch, 6,500 to be precise, of the Nove 24 puts for $1.25, and then turning around and picking up some upside, the Nove 30 calls, scooping those guys up for $1.85, netting out for a 60-cent debit on this one. And if you haven't been watching Men's Warehouse of late, this one's had a bit of a rough road this month. It was trading in the mid 30s or so going into earnings in early June. earnings were not exactly lighting up the tape. That cut the stock down at the knees, down from the mid-30s down to the high 20s, hovering around actually where it is now, about 28. So closed trading right now $27.96. So this has not exactly been a banner month for good old Men's Warehouse. And someone out here obviously thinking that between now and Nove expiration that this name is going to have a nice resurgence. Didn't see any stock done with this risk reversal. It seems to just be essentially a big size, cheap, bullish bet on the stock. And we talked about bullish risk reversals in the past. We like them on this show. They're a great way to pick up some bullish exposure or bearish exposure, whatever you're looking to do in a particular name. And it's a far more nuanced way to do it than the way we talked about in the past, like just coming in and scooping up a ton of upside. We like some of the more even nuanced risk reversals even further, where you use the puts to finance perhaps an upside vertical, so you're not going pure upside spec and just buying all that out of the money premium. But c'est la vie, this is still an interesting way to approach this. Andrew, John, and you guys watching any activity in Men's Warehouse? John, did you handle the other 7 contracts in Men's Warehouse today? Was that you?
Yeah, I saw this on your website. And I looked at my account, and I had I had $400 to throw out there, so went ahead and put this on.
You saw the 13,000 going up. I'll pick up the other 7.
We like this strategy as well on the desk. I mean, it is a cheaper way to get into an upside play, and it's not something that you don't really see the retail client doing. It's kind of a more sophisticated trade. A lot of the new clients or the people that are new to options will just playing directional, buying calls or buying verticals. But when this one does come along, it's usually done for a little bit more size than what you normally see in the day. I do like Men's Warehouse. I can see it has been pushed lower, so it looks like a good trade all around.
Men's Warehouse, a fine place to shop. Why not? We'll give him a free plug here on the show. You're going to like the way you look. I don't guarantee it, but they do.
He's got that K&G too, so I don't know what that is, but it's I've seen a store or two, so I guess it's both of that. So maybe
is there a sub brand? Is there a sub brand to Men's Warehouse?
Yeah, that's what it is. I wasn't gonna say it, but
all right. And next up on the before we go, Andrew, any comments on the risk reversal or?
You can leave it if you want. Looking at that, this stock, it's one of those things where it just looks like a very cheap company. I actually like the Men's Wear, and I was like they're very a customer. I can see why the business does well. So nothing having to do with the options, whatever. I know we're giving them a plug, but
I will say I was in there recently to buy a shirt, and their upsell is in full effect over there. So maybe that's why their stock has done well of late.
They generate an awful lot of cash. Well, they also do this stuff where they do the tuxedo rental thing. I don't know. I think I would have put together a slightly different risk reversal than this guy. If he was one of our clients, I think we could have helped him out. But I have to admit, and this thing has jumped on earnings before when the earnings were good. So it has upside surprise potentially in here as well. Because I remember trying to put a couple. It's hard because it's a thin stock to trade, but I like to play, to be honest. The idea of it on this stock.
So many of these big customers, though, they always tend to fixate on these risk reversals in the same month. I tend to like when they try to migrate that short side a little bit closer. Maybe you do near-term front month, a couple months out with the short downside puts, and you roll the calls out to November. Of course, then you get a little bit of that time spread angle involved in there as well, and then you have to, of course, repeat the sale every few months when that near-term option expires. It's a more nuanced way to capture some more theta, some more time decay out of the position. But of course, I think a lot of these large customers want to put it on. They want to set it and forget it. They don't want to be out there managing their downside or their gamma of their position every few weeks or few months. So they tend to like to just structure it all like this. That's how I would have structured it a little better.
It's easier, yeah. I mean, I think you could have picked better months in November, but there's no reason, I think if there's decent pricing, that you should ever pay any money for a risk reversal. To me, that's kind of one of my rules where I just don't want to be out of pocket the money. Because if the market just stays flat and crappy, I don't want to lose any money on it, which is entirely possible. So I just think that's one of my basic rules of putting on these type of risk reversals. You should do it for even or credit at best.
So you're a ZCRR fan, a zero cost risk reversal fan, huh?
I think if you're going to trade a risk reversal, there's enough risk already you're taking by selling the put. I don't see what the logic of creating the debit risk on the long juice. once you've already sold a put, that should be all your risk. Okay, in my mind, if you sell a put, you should not be taking more risk than the short put. That's just me. But what do I know?
Interesting.
Let's take more risk. Let's also
perspective.
be on some juice and take that risk too while we sell the put. To me, that's just stupid.
You always hear people going on and on about the zero cost collar. You never really hear the zero cost risk reversal angle. So that's a unique
because
one.
that's where the skew is. So
yes.
You got to work to not do it. What are you going to do?
As we said,
we have options education. That's
yes,
all I can say.
Exactly. This guy should be calling up Andrew and the boys over at the pit, and you can help work him through his 6,500 lots and perhaps a little bit more nuanced perspective. But we're going to move on here in the old odd block to our next name on the old docket, which is Motorola Solutions, MSI. You'll remember last year Google gobbled up, said that 5 times fast, Motorola, but they actually acquired the other portion, I believe MOT, ticker symbol of Google. They left behind this portion, which is the set-top box and some of the other businesses they didn't really want to get into. Longtime listeners will remember that Google gobbled up Motorola last year, at least the handset portion of the business. They left behind this portion, MSI, which is the other areas of Motorola that Google had less of an interest in. This one is trading right now at $46.79, down about a 2% on the day. And we saw a similar trade to what we saw right in the previous name in Men's Warehouse today in MSI. We saw a size bullish risk reversal going up in MSI. This is a name that averages south of 1,000 contracts a day. They've done over 11,500 already today. And as we saw in Men's Warehouse, the bulk of that was in one bullish risk reversal. We saw someone coming in and selling 5,500 of the January 2013 40 puts for $1.48, and then picking up the same amount, 5,500 of the Jan 37 calls for $3.55. That nets out to a $2.07 debit. And right off the bat, Andrew, I'm guessing you're not loving this. I'm just guessing. I don't know. Maybe.
Yeah, I was already laughing over here when I was reading the notes.
Stop paying for these. The madness.
Well, why don't you tell us, then what put you would have sold, or what reversal? Because I was trying to look at the Men's Warehouse one when we were looking for even money.
I thought I saw one for at least even in Men's Warehouse and Nove.
Yeah.
Nove quarter 30 for the Men's Warehouse. I think you could have worked that, especially going down, selling that note. I think you do the no quarter 30 you could work that for even, no problem, or slight credit. And that's still $3 below the market. Okay. Where is Motorola Solutions? What is the symbol? MS?
MSI. Trading 46.80.
Okay, so they're going to January. Is there a divvy? I'm looking at the divvy. I don't think so.
I don't see one here. No.
When's Motorola last made any money? I don't know how they're paying a dividend. I mean, if Google bought them out for their license, their technology, I don't see how they're making a divvy. So this guy puts on the 40.37.
Actually, there was a dividend. It was back in mid-June, a couple weeks ago.
Oh, okay. So I mean, they're selling the Jan 40 puts and buying the 37. That is a very there's got to be a misprice there.
Yeah, because how can those puts be so cheap? 40 puts. Okay.
Oh, so the 40 puts for $1.48, but those are worth more than the 37. Okay. Am I missing something there?
Hold on.
Stock's trading at $46. So
look, maybe
calls are $9 of money.
So the calls are more.
I'm sorry. I misread it. It's the Jan 47 calls. 47 calls.
Okay.
Yeah, so 37 would be a guts
call.
Risk reversal. He did not do a guts risk reversal.
Okay, so he bought the at the money juice and then he sold the 40 puts. All right, so the only thing I'll stipulate again, obviously not as good as trying to do these for even. I mean, but if you look at the Jan 50 43, Jan 50 42. That was probably about as far away as I would go. He is buying some gamma though. So I will give a nod to the fact that he's buying the more at the money and selling that out of the money put against. That at least is a better alternative than to paying up for that out of the money. So I still think, though, here, when you think about it, 40. I like the 49. I think even like the Jan 50, 43 even. I mean, if you sell on the 40 put, I think you just move that up a little more. So that's how, I mean, I would assemble that. The at the money is not, at least you have some gamma. That's all I can say. It works. The trade, at least you'll get some performance on the upside. But I would just actually move that up a little bit, because in reality, I mean, it is a $46 stock. A 10% move is, you're right there at the strike, right? So I think you do that for even, you're going to be real happy if you trade the 50-43. You actually do that for decent credit.
I've never really focused on the. Well, I got told, like I said, I like to structure my risk reversals a little bit differently. I love risk reversals as well. I'm always been a big fan of them. I do often do them in the same month. Usually it's near term if I want something really quick, a really quick bang for my buck kind of pop on a particular underlying. But
then you move it more toward at the money.
Yeah,
right?
Exactly. But when if I have a little more time to structure something, I'm looking for a longer term time horizon, like both of these guys have been today. I do like the way I said before, where I'll focus the longer arm of the risk reversal, usually the upside call if it's a bullish one, on the farther off contracts, and I'll roll the nearer term, because I have a little more time to manage these, obviously, on some nearer term contracts. And then off the bat, you're right, there is a debit risk there. You're paying in the initial outlay, but as you continue that trade over the lifespan of that trade, you're going to, if you manage it correctly, you're going to usually, at the very least, offset all of your outlay by the time you get to the final month of that trade, if not, collect substantially more by managing it a little more correctly. So that's typically why I don't focus in the initial trade setup on zero debit. But I guess if you're like one of these guys, you want to set it and forget it, then your approach makes a lot of sense, where you want to structure it in a much more premium neutral capacity.
Like if you're going 30 days in or something like that, you want the gamma to pop fast, and you just want that put against it to make the whole thing just collapse super quick, and so you can make some dough. So that's it's almost like you're structuring the delta differently. So you think about it like, okay, I want my delta to perform like this, I want my delta to perform like this. It's like, that option paper, like no deltas are created really equal, right? So there's an explosive delta, and there's kind of this, okay, I'm sort of a long-term buyer delta, and you want it to act a certain way. So we help new students and stuff, we try to break down the acceleration of the deltas they have, and that it lends itself to different kinds of positions, I guess, or different types of stocks, or what you want to do. So you're right. I just don't see, it depends on the acceleration of the underlying. If you're buying something in January of 2013, you're not thinking acceleration. If you want a risk reversal on some of these little tasty stocks that we do that have a tendency to pop, that's a different story. I don't view the gamma as much of a risk, because I'm not going to hold it for 8 months. You know what I mean? It's on and it's off.
Yeah, you tend to do a lot more quick pop-in type of risk reversals than these guys who are looking for 6-8 months down the road. But yeah, I like this. This is this is going to do it for the odd block for today. But I like this. We should call it the risk reversal hour this week, because it's a lot of fun stuff to talk about with these trades. It is one of, I think everyone here on the show, big fans of the risk reversals. A lot of different ways to set them up. Of course, they are also one of the best barometers for looking at skew. The old 25 delta risk reversal, typical barometer everyone uses to look at the ways the skew is shaping up across a variety of underlying. So risk reversals have a lot of great benefits, not the least of which is that they're pretty fun to construct and to trade. But that's going to do it for the risk reversal hour for today, and now we're going to dive right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, the portion of the show where the boys over at OX take the reins, and I get to take a seat. So, Mr. Grigas, what is going on in the land of OX aside from oil and waiting for the Supreme Court to act?
Yeah, with us taping this midday show, are you still going to have your tasty drink? It's a little early.
I will have a tasty flavored water. How about that?
There you go. Last week we had a visitor from the Amex come in to talk about a new product. I wouldn't necessarily say new, or the second coming of a product that they tried to do about 2.5 years ago. Andrew and Mark might be familiar with the binaries.
The alpha indices, these?
No, those alpha.
Oh, the world currencies. Yeah, they're rebranding them.
We have two accounts that are trading that, and they're pretty active in them. I guess if you fully understand them and use them as they were intended to, you can do quite well.
It's probably Paul over at NASDAQ who's trading them.
Well, yeah, that's one of them. But no, we had the Amex come in, and while I had conflicting schedules last week, I wasn't able to make the meeting. I did get a hold of the guy's deck and was able to peruse it last week. But they are bringing back binaries. I'm sorry,
I thought you said NASDAQ. You said Amex?
Amex, yeah.
Oh, so they're bringing back their binary options. Oh, those were. Yeah. You know, I've given them a hard time for the last couple of years since they canceled that contract. It was a great idea. They really were on it for a long time. We were one of the few sites that really wrote about it and endorsed it because we kind of understood the value behind it. Their attempt to really try to migrate retail liquidity, like we talk about all the time on the show, try to migrate it from this garbage out of the money stuff down to make a way to make the at the monies cheaper or the near at the monies cheaper so that people can actually buy some options with some real juice. And it was a great idea, a great concept, and it just withered and died on the vine because Amex had no money to promote it, and it was right around the time that they got gobbled up by Arca, so it was a terrible time for them to push a new product. So it kind of died. But every year at OIC, and every time I sit down and talk with the heads of Amex, like Steve Crutchfield is running Amex over there right now, and listeners can go to theoptionsinsider.com and listen to our interview we just put up a couple weeks ago I have with him, where I asked him this exact question. I said, Steve, when, for the love of God, are you going to dive back into the binary arena? So maybe they finally, good to hear they finally got the message and are looking into these products again.
Yeah, they came in for a good hour and a half. Got a 50-page outline here. It's very basic. I'm not sure who they were trying to teach these, but these have to be the most simplest options to understand if you're coming into the arena and not knowing anything about options. But basically, it either finishes at 0 or finishes at 100. So your risk and your potential is capped on both ends. When they had them out about 2.5 years ago, they had them on, I think, your big securities, Goldman, Apple, Google, Priceline, the ones that people pretty much are actively trading right now. It was easier for people to understand, and like Mark said, it did not take off. There was little to no promotion by the exchange. We put banners up, but volume was present for the first few weeks and then just tapered off into almost nothing. When they pulled them, we still offered the SPX and the VIX binaries, and volume on that is somewhat anemic as well. We recently, within the last 3 to 4 months, pulled those off the site as well. The cost to support those two products became more than they were actually, generating in any type of customer interest or even commissions. So we pulled those off. But we do plan to offer these when they do return. We will promote it on the website. There's been some discussion on whether these things are good for the novice retail investor, because they're really a different product than your standard options. They don't deliver shares. It seems more basic, but I think sometimes it may lead to some type of confusion if you're new to options as a whole. How many different types of options are they going to have? It seems like more products are coming out here every few months with the minis and the daily expirations down the road. It just seems like I said before, exchanges want to continue to make the next big, great product like the VIX and the SPX PMs. But we're hoping that these will give people a little bit of a alternative to, as Mark said, being able to kind of buy something with a little bit more at the money than, putting your $500 on a $50 out of the money call and hoping that the earnings is going to push them over the top. I mean, that's just not a good way to. I'm glad to hear
that they're pushing these again, or at least thinking about doing so, because that's the best news I've heard all week. Because these were an interesting product. And you're right, I mean, maybe a binary isn't the ideal way to do it, but so far, every other way that's been attempted to try to get retail to really understand, hey, stop wasting your money on 10 and 15 delta nonsense, it's all failed. So if this is perhaps the product that can get them to understand that, or at the least start looking at the money stuff or near at the money stuff, particularly when they're buying juice, as Andrew likes to say, then I think that's an effort that is worth supporting.
Yeah, and they're calling them BYRDs, BYRDS, binary return options. So when you start hearing that catchphrase in your local investing club, that's what they are talking about. Some of the risks that we saw that you may want to be aware is that I think they only had 3 to 4 market makers. I think Susquehanna, DRW, and Knight were 3 of them, but I know at one point there was only 1 market maker left. So one of the things that we saw, one of the things you want to be worried about is the low vol, low open interest, and some wide spreads out there too. Sometimes the spreads are up to 25, 30 cents wide, and since it's capped at 100, you can imagine what that can do on your return. So you may want to watch out when these get going, make sure that the liquidity is there. But no risk of delivery, no Monday morning surprises, and we're hoping they are a success because they are fairly easy to explain to a novice customer on the phone, right? 0 or 100 doesn't get much easier than that. Other things we're hearing on the desk, I don't know, everyone's in the Chicagoland area. I'm not sure about Andrew out east, but we have not have rain in the Chicago area for about the last 3 weeks. And if you take a look at a grain chart, they're starting to take a look at the weather. Initially, at the start of this year, we had an abundance of corn planted this year, and you can see that the prices were somewhat suppressed over the last few weeks with the lack of rain and the lack of rain in the next 5 to 10 days. You can see corn went limit up today. I didn't check right now if it's still trading at those levels, but we're getting a lot of calls on people trading in and out of corn. And basically what we're hearing is that even with the larger plantings, we're going to start seeing some these higher corn prices and grain prices altogether can continue. Other than those 2 things, that's about it on the desk.
Well, like I said, that is some of the best news I've heard in a while, that they're starting to put some resources behind the binaries again. Because I literally just had this conversation with Steve Crutchfield from Amex a little over a month ago, and he still was uncertain at that time. So it seems like they come down the better side of the fence, at least in my opinion on this, because like I said, in the end of the day, any product that helps retail to achieve that migration of liquidity is a good thing in my book.
Yeah, I didn't see what securities they're going to offer it on, though. That's like it's literally 50 pages here, double-sided. I can't find what contracts they're going to choose.
I have to imagine it's got to be your standard Apples, Googles, all the big names for now. They're not going to start in, terrible illiquid.
Men's Warehouse?
Yeah, Men's Warehouse. That's the other big name. Amex to relaunch binaries on Men's Warehouse. That would be yet another death knell for that product, I'm afraid. The 7 extra contracts we saw go up today were all in binaries. But yes, interesting stuff. Thank you for that, John. That's really interesting. I'll have to look into that and see exactly what the details are on it if they're available. But that's
if I have the I got like 3 of them here. So, but unfortunately, I didn't get an electronic copy. But if we bump into each other, I'll dump one off for you.
All right, thank you for that. And now we're going to close out the old Express block for today and dive right into our Monday listener mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
Welcome to the listener mail segment. It's Monday. That means it's the time of the week when we like to include you, the listener, on the old show. And today we have an email coming in from George K., and he writes, I loved Mark's rants from the past few shows. Well, I'm glad I made an impression. He hit the nail on the head with both Morningstar and the Wall Street sequel. I'm a Morningstar subscriber, but their options offerings are a complete joke. I agree with his comments that it's 1983 from Morningstar's options perspective. They pretend that they don't exist. Hopefully you guys can fix that. Well, that's a tall order for us here, George, but he's referring to what I mentioned last week about the Morningstar investment conference and the fact that options were completely completely not available, not a topic of discussion in any of their panels, even the risk mitigation ones. And if you talk to people on the floor, hundreds of funds exhibiting there, and no one talking about when they talked about risk management, it was always through diversification and all the same old saws you've heard for years, and no one really talking about any way to implement options in any way, shape, and form, even as a hedge, which I thought was amazingly outdated in this day and age. But George goes on to write, as for the Wall Street sequel, Mark left out my favorite part, the Bud Fox Charlie Sheen cameo. That part was so bad that I turned off my TV in disgust, and it took me about another month to get around to actually finishing the movie. And he's right, I did completely forget about that part, and that was actually, maybe my mind blotted it out, because that was indeed the worst part of the movie by a long shot. I'm not sure if you guys have seen the Wall Street sequel, but there's a moment there at some party where Gordon Gekko bumps into Bud Fox, the Charlie Sheen character from the first movie. But apparently in the intervening years, Bud Fox has morphed into Charlie Sheen. He bumps into him and he's literally drunk, and he's got his arms around two girls, and he's going off about how he sold the airline for all this money and now he parties all the time. So literally he became Charlie Sheen in the intervening years, when apparently what the whole purpose of the original movie was to try to show him to have some sort of redeeming value at the end. And he's learning the value of actually maybe, doing some work and building a business and building things that last. And then, of course, he becomes Charlie Sheen, apparently. So all of those lessons gone. But interesting, yeah, I forgot about that part until he brought it up. But yeah, that was also atrociousness. And George got a lot of comments here this week, but I like this email. And he finishes up, he says, in all seriousness, thank you, Mark, for making the Options Insider Radio Network and providing so much great content like the Option Block. There truly is nothing else like this network or this show anywhere else. You've created a great home for options traders, and we appreciate it. And George, we here certainly appreciate guys like you for writing in and sharing your feedback with us. It's some great comments. We hope we are educating and or entertaining you on a regular basis here on the Option Block, as well as the rest of the programs on the Options Insider Radio Network. If you are an Option Block fan, I encourage you to check out the website, check us out on iTunes or on Stitcher, and listen to some of the other programs we have here on the network, because there's a lot of great stuff, everything from basic education all the way up to futures options trading to institutional volatility trading and volatility analysis, and you name it, we have something on the site for you, or on the network for you, I should say. We have a show for financial advisors who are interested in options, and a lot of different aspects of the options universe, all represented on the old Options Insider Radio Network. But since we are running late today, even though we're recording early, ironic, I know, but that's going to do it for the old listener mail block. And now we're going to dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our collective screens for the coming week, and I think we hit on most of it back in the opening trading block segment, where we discussed, of course, the Supreme Court. I haven't had a chance to check my news during the show. They haven't announced anything during the show, have they? They haven't ruled on healthcare?
Not yet, but the CNBC is like playing off that announcement. Like, I mean, they made Supreme Court announcement, imminent. And then it came out about like it was something on immigration.
Yeah,
it had nothing to do with
exactly. Yeah, the immigration one. That's really going to move the street. But that's their game. They need to gin up something every day to keep interest. That's part of the 24, or not in their case 24, but about 12-hour news cycle. They have to at least create some sort of interest, which is why we do ours on demand. We have a little more freedom in picking our subject matter and our content than having to gin up the immigration debate as some sort of great financial brouhaha.
Yeah, you can't put up a message that says breaking news, Dow down 30 points. I mean, that's not, breaking news. That's just news. Even barely news.
That's just perhaps news, yes. But of course, we also have the EU on the horizon. A lot of interesting debates happening in Germany right now, and that EU members meeting where they're going to try to sort out all the issues with Cyprus and Spain. So I think a lot of people keeping their powder dry going into later this week. which is interesting. You'd think if people had some more concern about these events, Andrew, then they would be diving into the VIX more. They would be picking up some more premium here. Vols would be up even more across the board. Vol is up, of course, across the board, but you're right, not to the degree you might expect given all of the hubbub in the atmosphere right now. So perhaps everyone's kind of becoming a little blasé to these repeated news cycles coming out of the Eurozone that it's the end of the world, and so they're probably thinking like you are that perhaps we're a bit range bound. No one's looking at VIX at 80 anytime soon, so they're going to load up a little bit, but maybe not go as crazy as they have been in recent months.
I think the Europeans, that's clear they got to do the same thing. We already did the TARP thing here. They need to do the TARP thing there. And that's what Spain is finally asking for. They're like, we just need the recap. Can you just guarantee this? And let's wait it out for a couple of years for all these governments to be able to pay back all their debts. If they rationalize some of these economies, of course, for the idiot guy that's running France now, he just thinks they're going to just print money forever. But the fact that they're going to do a recap, and if if the Mediterranean countries can actually start with some kind of fiscal sanity and maybe work the other side, I think that works. You had the Depression because there was no liquidity, and I think that's what avoided our 2008 from really becoming kind of a short-term depression, because they were able to. It wasn't perfect, but they were strategically able to inject liquidity, which is what they're going to need to do in Europe. You don't want nobody to loan to each other anymore, and that's. If there's problem with the VIX and there's problem with a lot of stuff, there's explosions there, it's because everybody fears just the no liquidity, which means then there's going to be no growth for sure. Nothing. You don't want the cycle to get worse because there's no credit, and credit's one thing the ECB can provide. They just got to get their heads out about it. I don't know why they have such a hard time dealing with that as a concept. And I think that's what the market kind of is waiting for. If they see some reasonable credit expansion, they're going to feel a little better. So,
well, don't they have a blueprint for what worked here, and why aren't they just mapping that out right now in Europe?
Because they're European. They got to do it their way. They're like, we're Europe. We're old. We've been around. We do it our way. It's...
Yeah, we're the new kid on the blocks.
And Germany had to restructure 10 years ago. They went through that, little recession. They loosened up some labor laws. They had to take some pipe, and then they came out of it stronger than ever, which is most likely what these other countries are going to end up doing, because only the ECB can print euros.
Take some pipe.
Is that what you said, Andrew? Take some pipe?
Yeah, haven't you heard that?
Every once in a while, the floor trader escapes in all of us, and I try to beat it back whenever possible, but sometimes it's a losing effort.
It was so casually said into the context of a great discussion. I was like, I don't think I just heard. I did the old rewind in the back of my head. That was great. I love it.
I think we should leave that in just for a little bit of context.
Well, you try to. As long as it's a more PG-rated floor euphemism.
But you're right that there is definitely a need to do some definite house cleaning over there in Europe. And I was talking with some of these guys at there's a Morningstar event last week too that I went over to dinner. I was chatting with some of their guys, and we were kind of just chatting about the general state of the European economy and how for years, if you went over there, especially in southern Europe and Spain, some of these areas, you went over there and it was a fantastic thing for an American, especially a busy American, to experience, where you're walking around there, in the plaza of any particular big city, at 11 o'clock a.m. or 10:30 a.m. on a Tuesday morning, and everyone's out in the cafes sipping their coffee and having a great time. And it's a fantastic lifestyle, and I think a lot of Americans were certainly envious of that. I know I was, particularly when I was beating my head against the wall down on the floor, and I would travel to Europe and I'd be like, wow, I'm doing something wrong. These people are actually enjoying life. I'm standing in a pit with sweaty men all day and getting ulcers. But on the flip side of that is that eventually that comes home to roost when a significant portion of your population is on the dole. That's not sustainable over the long term. And I think a lot of those inherent issues that were bred into the European economy are all finally coming to a head at once. And so it's interesting to see how options players and how we in particular will be playing this in the months to come. But interesting stuff. So far, a bit of a downside day, but a bit of a shrug from a volatility perspective. We'll see if that remains par for the course throughout the rest of the week. And that's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. I, of course, want to thank my cohorts here, my partners in crime, for joining me on the show today, starting off with you, Mr. Rock Lobster himself. What is coming up in the land of the pit, sir?
Well, we had a great event last week, our baseball event, teaching our guys mock trading, a little bit more understanding from how liquidity providers do things. That was kind of more our advanced students. They're not really even students anymore. They're just pro traders that we do a lot of work with. We're basically kind of becoming like a virtual trading firm where we have. One of the best things about trading firms or prop trading firms is like you kind of get that community going where you exchange a lot of ideas, like what's going on in the market, what's going on volatility here, and at Option Pit, that's the kind of thing that it's growing. It's kind of happening organically. I know I hate that word organic, but it is happening. So that's what we're continuing to do, is expanding that program. I believe Mark has another VIX presentation on the horizon. Just go to optionpit.com to our events tab, and it tells you all the little goodies that we have. We have one now, adjusting iron condors this week, which is actually a great way for people to think about trading those things, because it gives you things to do. You know how we say, you got to do stuff.
You certainly have to do stuff.
To do stuff. It's important to have some kind of exit or adjustment strategy. So Mark's, and the thing with iron condors, especially if you have deep enough room between the strikes, is there is some adjustment room. So you can do things, you can make adjustments that allows the positions to go on. I mean, we're not talking about being strategic about when you put them on. That's kind of a separate thing. But there are adjustment routines that work well, and that we use all the time. And so this is a good way. Mark will be leading that. Okay, and there we are. That's what we got going on. It's June 27th.
All right, and Mr. Grigas, what is coming up in the land of OX, sir?
Well, listeners will be listening to this tomorrow, which will be Tuesday. Wednesday, the 27th, we have our live site night in Orland Park, just about 35 miles southwest of downtown Chicago. Joe Cusick will be there doing a site walkthrough and discussing trading techniques. I am going to crash the party as well, so I may be there walking around in the back. Other than that, we can look at our wish list center on the overview. We put up 3 new ones this week. They expire on July 23rd. You can see the 15 past winners that we are implementing on the site. So voice of the customer is heard here. Get your votes on or get your suggestion in there, and we will try to implement it into the site.
Thank you for that, Mr. Grigas. And, of course, all of us here on the old All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.